Hey Brandon, how are you?
Hi, JP. Good morning.
All right, this is a little bit backwards today. We're going to reverse the roles. Instead of you being the MC, I'm going to take over that today. I wanted to do a quick interview with you about our month's theme, which is anxiety.
Yeah, all right. Yes, we were writing on that, and hit me.
All right, so
Hit me. What do you got?
yeah, so financial markets cause a lot of anxiety, as we know. I think if anyone's ever seen like CNBC,
Correction. Financial
yes.
markets do not cause anxiety.
Okay, what causes anxiety to you, Brandon?
Well, financial markets, so people's reaction to financial markets cause anxiety.
Got it.
But go on.
Okay, sure. So, my relationship to it was, starting out, you go on CNBC, there's Jim Cramer, and he's got all the buttons, and he's telling you to buy and sell, and there's yelling, and there's this big red thing that says the market's down, and there's a big green thing that says the market's up. And I feel like that is a lot of how consumers, retail finance people see the stock market. But there's also more to kind of anxiety around money and wealth, and that's a lot of what we do for a living. Talking with clients about that. So I want to do a little interview with you, pick your brain on this. And I want to start with when you started, because you started in the business at a very interesting time.
Wait, I know you're in charge,
Yes.
but can I comment on the CNBC thing?
Yeah, sure.
So the thing with like what causes anxiety is like thoughts, right? Like thoughts
Okay.
can cause anxiety. And sometimes when our body feels a certain way, then we've created we've equivocated, we've decided, oh, when my body feels tension, I must be nervous. And so if you have a nice TV at home with a good stereo system and CNBC is on talking about the markets, like they pump bass into that thing and you start to feel it in your body. You may not even know you're feeling it. And your body's like, oh my gosh, I'm nervous. What am I nervous about? And so sometimes I think, or not sometimes, like they want eyeballs and they want you to stay attentive and they're creating those physical sensations in your body to keep you watching.
Okay. That's interesting. I actually didn't know that.
Yeah.
Yeah. A lot of signaling.
And it's different because now news is like 24 hours a day.
Yeah.
And so when I was just like, I grew up before CNN, before 24-hour news, they had like Tom Brokaw. And I don't know, do you know what his job was? It was like what they would call him.
I don't know what they called him.
They would be called a TV anchor. They'd be called an anchor. Well, yeah, anchor man. I'm sure
Okay,
yeah. So, and the anchor man was like, this guy was going to anchor you. They were going to ground you in reality. And they had to like build up a crescendo, but release you because you weren't going to get any other news for another 24 hours. You weren't going to be, maybe you'd catch the morning show where they have like horns, like, but like the main part. And so, but now nobody's anchoring. They're just lifting and lifting and lifting. And so it's just something I've been thinking a lot about. And so you brought that up.
Yeah, no, I appreciate that. That's an interesting perspective. So thinking about, you grew up with the kind of the old school news cycle that obviously went away as you got older, and you get into the finance business, the retail finance business in 2009.
2009,
right?
June 2009.
So right after the Great Recession, maybe the best or worst, depending on how you look at it, time to join the business.
Yeah.
And where were you at that? Or which company were you at the time?
I was at one of those companies named after multiple dead people.
It still is on their legal documents too.
Yeah,
it only has one name now.
No, now it's one dead person.
Yeah, now just one dead person.
Yeah,
awesome.
It used to be like 5.
Yeah. And so you're starting out. There's obviously this very fresh wound of 2008 collapse. What was that like interacting with people? Because I assume you had to do like a lot of cold calling, or like you had to interact with people in different, less personal ways as a newbie, right?
Well, so one of the nice things for starting out at that time was everybody was getting laid off. So there was a lot of money in motion. So you could call people and be like, do you know what to do with your 401k? And people were very receptive. And so I built a business off. I mean, I was opening accounts for as low as $25,000 back then. But what was scary, if we were talking about anxiety, was we were all talking about the double dip recession back then. And people don't even think about that, or they forget about it. But like there was a real concern we were going to have a double dip. There was going to be a second recession. And I remember the investment firm that I worked for, everyone was like, there's not a double dip. There's not a double dip. And I was like, well, why can I trust you? I just didn't trust them because they almost they went bankrupt.
They did.
And they had to get bought out by another big bank at a discount. So I'm like, why would I trust you? Because you knew when the financial system was going to hell in a handbasket, you didn't tell anyone because you only make money off of fees. Like that's the only way you make money. And if that company and all the other major companies would have said, hey, this is a huge problem, then everybody would have sold their assets and they definitely would have gone bankrupt.
Right.
So they didn't and that's one of the reasons that we went independent, is that we don't have shareholders. Like we don't have to, if we can get out of the market, we don't have thousands of people, millions of people dependent on us to make money. Like we can get out of the market. So, but anyways, I got a little bit on a tangent. What was it like? It was really scary because you didn't know if there was going to be a double dip, and people were giving you your 401k, which is all the money they'd ever had. It wasn't, and the joke back then was like, I have a 201k, because it was like really cut. And it was like, and I got to put this in risk. And I got to invest in lots of stocks.
Right.
Because bonds were paying 1% back then.
Right.
So it didn't make sense to have a lot of bonds. So that was pretty scary.
Yeah. Was there a time where you felt like I'm now going from kind of opening new accounts, doing the smaller stuff, to I'm kind of taking that transition to really working with the family, getting to know them? Does that change how you handle people's anxiety rather than just, hey, we're going to do XYZ for you, we're going to organize your accounts? Like, I guess I'm wondering, is there ever a time where you felt like I now have to manage this person's feelings about the market and how they think about things, and how can I help them feel better about the long-term picture?
So one of the nicest things that anyone can ever tell a financial advisor or wealth manager is, I like your clients. Your clients are great people. Because basically they're telling you you're a nice person. Because if you look across a book of your clients, they're all going to be similar to you. You're going to attract people similar to you. So when I first started working, I had nervous clients because I was nervous. As I started to have experience and I became more confident and had multiple conversations. There's no one conversation that will put a client at ease. It's multiple conversations explaining how you see the markets, them gaining trust in your due diligence, in your process. They're paying you for process. Then you just kind of slip into it.
Got it.
So I don't know if there was a moment, but it did shift as I shifted.
Right. And so, the earthquake happened, everyone was worried about the aftershock, which was the double dip, and that didn't really happen. How long did it take people to kind of get out of that mindset and get back to what was the greed in the biggest bull market of all time, right?
When did we get to greed?
Yeah. Was it a light switch or was it a slow burn?
I don't know the answer to that. I mean, I do know we've been in a couple of years now where people don't. I think what happened was there was just so many years of 10, 15% corrections and then brought back up. So I remember Brexit. I remember this one vividly. Or Fukushima.
Yep.
Fukushima happened the same time like Ebola
it
was
out.
out.
2013, I think.
Yeah, and it was the same time as like there was Ebola and another thing and market panics, and then it get bought back right up. All of these events. So we became desensitized to correction. So every time like following 2009 there was a correction, everybody was like, oh no, this is the next one. This is the next one. And then they realized, or they started to think after so many corrections that got bought up in 5 days, oh, wait a minute. The market is getting pushed down, particularly by people who have an interest in it. They push it down, push it down. They buy at the lows. It goes back up. Right. So I am not saying that's always going to happen, but I think that the mentality now when a correction is it'll get bought back up, where closer to 2009, it was, oh, this is it. This is it again. This is the end. And there are a lot of investors like yourself who were not in, you had an experience with that.
Yeah. Yeah. It affected my family, but I wasn't an investor. I was pretty young during that time.
Yeah.
Gotcha. Yeah. And thinking about that kind of reaction to a crisis or to, the emotional state of the market, we fast forward from 2009, we've had all of our ups and downs. There's like a hilarious amount of stories if you go back between 2009 and 2020, where you could say any of these moments could have been the thing that sets off the next big one, quote unquote.
Lots of them.
But the next big one really was COVID, right? So it's 2020. It's actually the same year I joined the firm. It was at the end of 2020. But in the beginning of that, it's a seismic boom in the market. But what was that like for you you've known a lot of your clients now for a really long time. You've kind of seen these things play out before. How did that inform you to handle that situation? Because this is now very different. This isn't just financial. This is, we all can't leave our houses now for a year.
Yeah, I would say, quite honestly, COVID was the only time I was really scared. Yeah, like I was really scared. And I think it was because I can handle just markets being down is fine. I can handle that. I know what we own, why we own it.
Yeah.
But then I also had this own level of fear of my own life. Like, because we didn't know.
Mm-hmm.
Like anyone in the beginning who was like, I knew it was this and this. And I'm like, no, you didn't.
Yeah.
Nobody knew. Nobody knew. And so those first couple of weeks were like, do we have to wash our mail? Nobody knew.
Yeah.
Like, can I like put on gloves and a mask to get the Amazon package? Yeah. So I think that was the only. So the question is, what was it like in COVID? Or?
Yeah, I guess really kind of what was it like in COVID. But were you able to kind of look back in your past experience and kind of center yourself to handle the COVID anxiety that came with it? Because I'm sure, I mean, I didn't have the conversations with the clients. I wasn't here, but what was that like? What was it like managing through that? And managing through that for people.
I mean, I had a client call crying and saying like, am I going to be able to like live off my retirement funds?
Yeah.
And I knew the answer, but it's like really impactful.
Yeah.
And the answer was yes, of course. We planned for this. You've got cash. Blah, blah, blah. But that was really intense. What's really, really interesting about our business is that you have to listen and be a human being with that person who is crying and very authentically and truly concerned. Like there's a real concern about their future.
Yeah.
And then you have to hang up the phone and stop being a human being and trade.
Yeah.
Yeah. And then you have to like say, okay, now I have to like let go of all my emotions, because if I work emotionally, and you've done this, you execute our trades.
Yeah.
And sometimes the best trade is when you're sick to your stomach.
Yeah.
Like I've never liked this company, but it looks good on paper. It's the right thing for our clients. We have to do this. So what if they sell me bad sandwiches? Or whatever, I said that. It's not that, but we have another example like that. I don't want to give up the company I'm talking about. But yeah, so it's like, and so look, if all I had to do was just be a human being every day, it's awesome. Yeah. And if all I had to do is be a robot, kill me. But there's, but the mix between the two is a challenge that like we uniquely face as advisors, and that was COVID. It was like, how do I be a human being here, hang up the phone, and do something that scares the heck out of me? Yeah, and
when it's affecting you too. In a real way.
And you look back, we made good trades. Yeah, we made great trades, but they didn't feel that great at the time.
Yeah, I'm sure. I'm sure
you were there.
Yeah. So awesome. So we have COVID. We then have the market essentially jumps right back into it, right? 2021 was, you're talking about going from panic to greed. We went back to greed immediately, right? 2021 was the small cap tech revolution. The market was up like, depending on the market you looked at, it was up 30%.
Peloton, where's that now?
Peloton was a thing that we all thought was going to last forever.
Yeah.
And then it immediately crashes again in 2022, right? That was almost the double dip that we thought 2008 was going to be. Was in 2022. But I don't know about you, my personal experience being here was that no one was really nervous about 2022. It was almost just kind of like, hey, there's inflation, market go down. I didn't feel the same anxiety as kind of my neighbors had during COVID, right? Because it's kind of like, well, at least we're not dying from a global pandemic anymore. We're just back to the financial markets getting a little bit beat up. How did you feel about that kind of double dip action?
So I think anxiety, and I was talking about this with a dear friend of mine a couple weeks ago. Like anxiety, there's anxiety and fear. Let's see if I can get this right. We just spoke about this. Anxiety is like something you think will happen. Like there's like something bad is going to happen. Where fear, something happened right there, and you're reacting. In it.
Yeah.
Right. And so there was a lot of fear in COVID, and we were like, people were just reacting to it because COVID was real. Yeah, like all of the realities can be argued and even proven through science to some extent, but it was real. Yeah. 2022 was just fear. There was like fear, like, oh, something bad might happen.
Yeah. There's anxiety.
There's anxiety. Yeah. So getting back to our theme of anxiety, anxiety is caused by the stories we tell ourselves. Yeah. And those stories, it doesn't matter whether we can tell them they're true or not. They're just stories we tell ourselves. And I think in 2022, everybody was telling themselves, oh, this is just a correction. Yeah. We had such a big boom. Now we have a correction. Yeah. And so the key, I think, to anxiety, and I'm no expert at this. I'm an expert at the markets, and I'm a practitioner of managing anxiety which all of us need to do in this crazy world, is starting to pay attention to what are the stories we're telling ourselves, and are they serving me, and can I look at it differently? Can I change the way I look at things so that the things that I look at change? Is the expression. Can I change the way I look at things so that things will change? And I think that's possible with markets to some extent. Not to downplay all the real things that, and that's not to downplay all of the reality that markets could potentially impact our lives.
Yeah. And then ending on the most recent, I would say, wave of anxiety, or the most common thing we talk to clients about right now is the election. And I think that's a weird one because that kind of takes two things that aren't connected usually, which is kind of like political commentary, financial commentary, and they're starting to come together. Every 4 years, we hear so-and-so is going to be president. And we know people on all sides of every opinion.
Yeah.
You're the same thing. So-and-so could become president, something bad's going to happen. And I'll be writing a piece on this with a little bit of data, but usually that nothing really bad happens immediately after an election. But that kind of anxiety, do you have any advice for people on how to manage that as we go into an election season where, the narrative is off the chain?
Well, I don't have any advice for anyone, but I can tell you what I do.
Okay, great.
I think the only thing, there are things that I could do. I could try to get people to vote, create, advocate for fair voting. I don't do either of those. I'm pretty busy running this business with you, but those are things I could do.
Totally.
I could canvass and try to explain to people the views of my candidate. Again, I don't. And then I can show up on voting day or, vote early.
Yeah. So you can try to exercise control over a situation in small ways.
So I can, vote early, vote often.
There you go.
No. So you want and then that's it. But so last night there was a vice presidential debate, and I was in the car and I was like, I'm a little bored. Let me see what's on the radio. In 5 minutes, I was like, I can't listen to this because no matter what's said then is not going to impact my vote. Right. And me getting upset about them, which I was within 3-5 minutes, I'm like, God, this is horrible. Stop. So for me, managing it is just really just knowing what I can control, which is vote, and knowing that there are other actions I could take. And frankly, I'm not.
Yeah, I think, for me personally, it's, kind of that, being a human and being a robot. Obviously we have our own opinions and ways we think things should go. There's also the robot side. One of my big responsibilities, like you say, is executing on our portfolio. Yeah. And whenever I think of, I hear the opinions of our clients, I just have to think, at the end of the day, I got to look at the markets and say, in my entire lifetime, there's never been half of a country that was super happy with the president that got elected every 4 years, right? Someone's always a loser on that side, and the market has still done well, even with the booms and the busts. Things have gone up and the economy has grown, and we've all benefited from it. So I think just try to take yourself out of it, looking long-term instead of short-term, because who knows short-term, right? There's a litany of other things going on in the world that could be an issue. But over the long term, we all want to go to work, we all want to support our families, we all want to do the things that grow the economy, and those positives, I think, outweigh kind of our short-term anxieties about policy.
Yeah, I agree with you in the sense that we really don't know how the presidential, nobody knows who's going to win, and then whoever wins, we don't know how the markets will react. Historically, we found that they react the same. I do know that there's a desire to be felt heard and represented by our president and our government, and that these two candidates are representing seem to be, let me see what I want to say here. Yeah. I think that desire is really strong among people to have somebody in place. And I think that there are really large policy implications. And that stuff's all real, but I don't know, for me, I just don't want to give them my energy. Yeah. It doesn't mean I'm not informed, but I'll read. I'm not going to listen. I'm going to read once a week about the news. I'm not going to watch it every day. Right. Because it doesn't change every day.
Yeah, that's true.
It's you could spend an hour on a Sunday and know everything that happened within the last week and stay informed and just be like, okay, I'm just going to block this out. And that's the way that I digest. And even a lot of the financial news, that's the way we digest it.
Oh, yeah. Yeah, if you tried to be on Twitter keeping up with every little financial thing, you would go insane.
especially because half of it's false.
That's true. Yeah, that's true.
Yeah. So everybody wants your attention. Everyone wants my attention, and I have to be very selective on who I give it to. Yeah. And sometimes I'm really successful at that, and sometimes I'm not. And when I'm not, I'm typically anxious.
There you go.
Yeah.
Well, as we close this out, is there anything, lessons learned or anything you want to pass on to everybody else?
Oh, wow. No.
Okay. Well, there you go.
No. I appreciate you interviewing me. I get the week off or the month off. We will be focusing on anxiety this month, or we won't be focusing on it, but we'll be bringing some light to it and talking about it because it gets in the way of joy.
Agreed.
Yeah.
Agreed. Well, Brandon, thank you for sitting down for this interview. I hope everyone enjoys it.
Thanks, man.
You're welcome.